Hey, what's going on, everybody? It is Friday, November 18th. Good day today. You know, one thing I want to mention, and I'm sure you're seeing this for yourself, is that these intraday dips in the market, these bouts of selling, they're getting turned back. I mean, buyers are coming in on the dips. And I think that's a good sign. Of course, I don't only look at that. I've been telling you that we are seeing, and we have been seeing, an improvement in the fiscal flows. And basically, I said, you know, those bottomed from late July into early September. And that basically correlated closely to the bottom in the stock market. And now these flows have been picking up. And so fundamentally, you know, you're filling up the swimming pool. So I think we're in a positive mode right now. Now, these flows they were big this month because of that quarterly interest payment, and they're going to slow down a little bit, but it's a rising trend, which is good. And so I stay positive. Somebody asked me a question about, Mike, can you talk about the petrodollar or petrodollars? I'm going to talk about that. One thing I haven't mentioned, and I'll just talk about this briefly, is this whole situation with FTX, the bankruptcy of FTX, this crypto exchange, and this kid. I call him a kid, I don't know, maybe he was in his 30s, I don't know, Sam Bankman-Fried. I haven't spoken about that because I literally have no words at this point. I mean, I have no words. I've been doing this, you know, I've been in this business for over 40 years. Those of you who have followed me for any length of time, you know I've mentioned I was a member of 4 different exchanges. I was a floor trader. I was in the pits in Chicago and New York. I'm a New York guy. I grew up here in the streets of New York. You know, I knew in the trading community, I knew a lot of tough guys who were very successful. And, you know, that wasn't just because of their brains. I mean, they were just physically tough, strong individuals. And when I see a guy like Sam Bankman-Fried, I mean, if you've listened to any of his interviews, I mean, I don't even know what to say. I mean, this guy, to me, you know, if he would never fly. I mean, to me, if I spoke to him, if I met with him, I mean, it would not fly in my head. Now, maybe that's, you know, maybe I'm coming to the wrong conclusion, or maybe the things I base judgments on, maybe that's wrong. Maybe that's skewed from my upbringing. But I mean, when I see the list of people who went in with this guy, and I mean, the list is, you're talking about, I mean, you know, if there's an A list for finance, I mean, they were all on it, from the you know, the trading community, from the hedge fund community, from the venture capital community, from celebrities, athletes. I mean, you know, it just, again, I have no words for this. I don't know how you guys feel about this, you know, but it's just, I listen to this kid and I'm like, I just don't get it. I don't get it. I mean, it's like, and you know, I've spoken about this in different, you know, in different situations where I said it's kind of like a big club, and it's a very it's not a big club. Let me take that back. It's like an exclusive elite club. And when some of these people, you know, they want to be members in this, they don't do the due diligence. They don't, you know, really sit down and research and think about it. They want to be in that elite club. And I'll give you an example. Way back in the 80s, you know, I traded some money for Paul Tudor Jones, Tudor Investment Corporation. I was managing some of his money. And he was very clever. Well, he was a good trader, but more so, I have to say, he was very, very clever when it came to his own PR, his own public relations, and his own marketing. Early on, I could remember there were articles about him in the New York Post. I don't know if any of you read the New York Post. The New York Post has like this gossip page called Page 6. It's not actually on Page 6, but that's what it's called. All right, you could, if you go to newyorkpost.com, you could click on the section Page 6. And way back in the early 80s, Jones used to get himself featured or covered in Page 6 because he was out at the flashy nightclubs here in New York with some models and stuff like that. And he developed this reputation kind of like this Wall Street cowboy, and it was alluring, it was enticing, and people wanted to attach themselves with it, and there was like the community of institutional investors. It got to the point where he would throw these very exclusive parties, and all these institutional guys, they wanted to get invited to those parties. So what was the easiest way for them to get that invitation? They would give him money to manage. All right, so then it became this thing where this exclusivity, and this kind of elite, members only kind of a situation. And they all wanted in. And it had nothing to do with performance. I'm not saying he wasn't good as a trader. I don't know, I haven't followed him for a long, long time, and I don't manage money for him anymore. But I'm saying it was all about that marketing. And I see with this kid, I don't know, he was connected, he's got very connected parents. I just don't know. Like for me, for a guy who grew up here in New York, on this, in the streets of New York, traded on various exchanges in the pits with rough guys, all right, it would never fly. I mean, something like that, if I met with this guy and just listening to this guy, again, I don't know how you people feel, but I see a lot of these flashy folks on TV or in the media or in athletics or stardom or big time in finance. I mean, it just blows my mind that they go in on something like this and how this kid was able to pull it off. Anyway, that's all I want to say about that. But it never ceases to amaze me, and it's also like, it's kind of like along the same lines as, when I talk about the central banks and the idiocy of their belief system and their policies that are actually contrary to what they try to achieve, but it doesn't matter to them. They don't think about it. It's an orthodoxy, it's a belief system. It's very similar to any kind of cultish behavior where in order to get into that elite group, you have to think like them, you have to speak like them, you have to behave like them. And it doesn't matter whether you're right or wrong. It doesn't matter whether what you are doing, works, or if it's beneficial in some way to society, or achieving what you're trying to achieve. That stuff, that's all secondary or tertiary to being in that club. All right. Anyway, let's talk about petrodollars. So basically, petrodollars are dollars paid to oil exporting countries. All right, so when oil was priced in dollars, and this goes way back, to right after basically World War II, okay? Oil was priced in dollars, so like if you wanted to buy oil and you were an importing nation, you had to have dollars to pay for that oil. And oil is the primary energy source of the world's economy. All right, it's getting more diversified, but it's still the primary source. But we're seeing more diversification as technology and everything else comes into play. So the only way for another country to get dollars, because the United States is the monopoly issuer of the dollar. Dollars can't come from any other place. I've explained this many times. Dollars don't come from China. They don't come from you working at your job. They can only come from the government of the United States. It is the monopoly issuer of the dollar. And the only way a non-issuer of the dollar, that means everybody else, all other countries, the only way they can get dollars to buy that oil, they got to sell us stuff, all right? So they got to export to the United States, in order to get dollars. And so this is one of the reasons why the United States runs like perennial trade deficits. It's not because, we hear people say, oh, we're profligate spenders and we're running these international debts. No, it's not our fault. It has to be that way in order for the rest of the world to get dollars to buy oil. But I will say this, and this is a very important point that I'm about to make, all right? So listen carefully, because people say, oh, the United States has such an advantage because it has the petrodollar and it could run these trade deficits. And it's not that we could run these trade deficits, it's that it happens because other countries need the dollar, okay? But here's what I'm about to say, very important, pay attention to this. It's not about what currency we transact in, okay? It's about what currency the rest of the world wants to net save. In other words, do they want to build up a stockpile, a reserve of some foreign currency? That's the key thing, because they could transact in dollars. Let's say they export to us, they get the dollars, they buy the oil, okay? I'm sorry, they sell us the oil, they buy their oil, all right? And they have, let's say, some dollars left over. They don't have to hold those dollars in reserve. They could exchange those for something else. They could even exchange them back to the United States for other goods or services made in the United States. So it's not a function of the currency of transaction. It's more a function of what is the desire of the rest of the world in terms of their desire to net save. Do they want to net save? What do I mean by net save? Well, look, China has a surplus of like $1 trillion in dollars. Japan has a surplus of like, I don't know, what is it now? 1.3, 1.4 trillion. That's a net savings in a foreign currency, the dollar. Here's the interesting thing though, all right? For the first time ever, basically, or at least in recent times, going back to the 70s, the United States is now a net exporter of oil. So what does that mean? It means that the rest of the world, since the United States is now net exporting oil, crude and petroleum products, the rest of the world is giving back their dollars to us in exchange for our oil, which is causing our trade deficit to shrink. I'll show you a chart right here. It's shrunk a lot recently since the U.S. has flipped to a position of being a net exporter of oil. And I think this trend is going to continue as long as these sanctions on Russia, and it inhibits the ability of Russia to be like the supplier that it can be to the rest of the world. All right, it just makes it harder for them. So we have stepped in. The United States has stepped in. Up until I think it was the Obama administration at first. I think it was Trump, but somebody told me it started with Obama. It was illegal. There was a ban on U.S. exports of oil since like going back to the 70s all the way up to, let's call it like, let's call it like 2008 or 2012. Maybe it was like 2012, 2014, something like that. And Trump really got it going because he was like the businessman. We got to make money. We got to sell our oil, right? That was our so-called oil independence But what happened to our independence was sending it off for foreigners to consume. But once they lifted the ban on oil exports, boom, it really started to take off. And so now, when you hear this, petrodollar thing, don't think that's going to last forever, because we're actually seeing what's probably like a very, very important, switch, turnaround in that equation, where the U.S. is now a net exporter of oil. So in other words, the rest of the world is giving us back those dollars in exchange for oil. So the reserve of dollars held by the rest of the world is slowly starting to go down. That's the only way the rest of the world can rid itself of dollars. Like when one country sells its dollar to another country, there's still the same amount of dollars. It just changed hands. But when the rest of the world sends its dollars to us in exchange for product, whether that's oil or whatever, it doesn't matter, those dollars are taken out of the global reserve system. It's a slow trend. It's like the tide's moving, but that's what's happening right now. All right, that's it for today, folks. Enjoy the weekend, and I'll see you on Monday. Bye.